Welcome to the March 31st, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. The DOGE and Tariff Recession? Question mark. We don't know yet, but I have some advanced knowledge, and this is going to be the big issue for the markets this year. It already is. The Atlanta Fed. Those of you that are subscribers, well, you know that we've used the Atlanta Fed, and they have been the most accurate at predicting the current quarter because they gather the data every week and they post it. Now, here's a little bad news on economic contraction. Minus 2.8% estimate for first quarter GDP. Now, part of what happened, and it's acknowledged right here, they said without adjusting for exports and imports, right, it was a minus 0.5%, which is still contraction. You get 2 quarters in a row of contraction, and that's an official definition of recession. Well, what happened on the exports and imports? Well, imports or net exports are in the calculation for GDP. So is government spending. Don't forget that because we're about to go to the government spending impact here in just a second. It's very important for 2025, 2026. I've got a playbook for you on that. Well, this says that there were a huge number of imports. For example, gold, $20 billion worth of gold before the tariffs went from London to New York. That's a net import. It subtracts from GDP, by the way. There were huge imports in anticipation of the tariffs. Now you have tariff chaos. Companies have to adjust for it, and it disrupts business. Well, there's a contractionary focus. But there's something that happened that I want to take you through. First off, let's do the sell-off, and then I want to give you a playbook for 2025, 2026 to help you make great decisions in the year ahead. By the way, I'm Spencer McGowan, your financial weatherman and president, McGowan Group Wealth Management. We serve affluent families right here from the Crescent in Dallas. You can find us at NetWorthRadio.com. Set up your time for a brainstorming session. All right. Look at this. This is the NASDAQ. This correction is centered on the Magnificent Seven. The sell-off accelerated Friday with an uptick in the core personal consumption expenditures inflation index. It upticked a little, and they upticked stocks on Friday. Wow, you're kind of rocking along the bottom of this correction, which climaxed in the middle of March. There may be more to go on the Magnificent Seven because overpriced tech is just getting crushed. Magnificent Seven's down 22% from its recent peak. Wow. And then you take the NASDAQ year to date down 7 to 8% depending on the minute that we count it. This is adjusting the pricing. We had said before, earlier or late in 2024, we were due for about a 10% correction, and that has happened in the S&P and the Dow. Here's the S&P 500, down about 5% for the year, and the primary factor is adjusting the price of overpriced tech. This is year to date. That looks pretty good. What is that? That's a plus 8% year to date on the S&P Oil and Gas Index. Wow, that even surprised me. So I got the S&P at a minus 5. I got energy at a plus 8. Here at the end of the first quarter, that's helped drive us to a profit for the year instead of a loss because the energy stocks, undervalued companies with dividends, are where the money is flowing right now. And that's an insight that we built into our managed model portfolios, which is why you want the team that cares on your side, a team of 10 serving affluent families right here from the Crescent. All right, we're going to go to Argentina. Why would we go to Argentina? Okay, well, let's list the factors and the policy. Government spending cuts. DOGE just identified $250 billion, $250 billion in spending cuts. All right, so we got government spending cuts. we've got inflation that's still too high and deregulation that will eventually or could eventually bring that down. All right, government spending cuts, deregulation. Who is that? That's Javier Milei, Il Loco, down in Argentina. I want to walk you through what happened because he caused a recession. Wow. But what happened to their stock market? All right. Javier takes office. It's right back here, November of 2023. Javier gets elected. Said, I'm going to cut all the wasteful spending in government. I'm going to bring down inflation. How did things go? Well, this might be a good playbook. All right. So initially the market spikes from 40 to 50, measured by the ETF that trades in the United States for Argentinian stocks. Then it goes over 60. Wow, God bless Javier, everybody loves him. But wait, he cut government spending by 30%, and it caused a technical recession. Argentina was a minus 2.4% for 2024. Now, what's happened since? Okay. This is where I believe Argentinian investors realized that they're in recession because Javier cut spending. And a lot of people don't like Javier because he cut government spending. But the deregulation took hold. And the reduced government spending, I'll show you what happened to inflation. Anyway, that was about a 25% correction. It still didn't go below where he was elected. Anyway, now the Argentinian economy is projected to grow at over 5% this year, according to the IMF. What's happened to the stock market? 83 versus 40. It's a double over that period with a recession correction in between. So if you wanted the highest internal rate of return and you were prescient, right? It's easier in hindsight. You would have bought a bunch of Argentinian stocks right here. Okay. What happened to their inflation? This is their inflation rate. And it's still high by developed country standards, but there's no argument that inflation is down by 76% from its peak. That was great news. Now you've got 5% GDP growth. And yes, you had a 2024 recession. Because if you took in the US a $30 trillion economy and you cut $1 trillion in government spending, that's minus 3.3% impact on GDP. But if you were an Argentinian stock investor, what would you say about that? You would say, wow, that's the good kind of recession. I want to get my dry gunpowder and I want to find the best bargains that are going to benefit from deregulation. Thank you for tuning in today. NetWorthRadio.com. Contact us there and set your time for a brainstorming session to upgrade your plan to be a potential beneficiary of the disruption. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.